Most traders enter the Forex market thinking that strategies, indicators, and technical analysis are the keys to success. But the reality is, more than 70% of trading success comes from psychology. Strategies can be learned within weeks, but controlling emotions can take months or even years of practice. That's why in this video, I'll show you how emotions influence your trading, why most traders lose because of them, and the exact steps you can take to master your mind and trade with discipline. Think about this. The Forex market is not just a financial arena. It's a psychological battlefield. Every candle you see on the chart represents fear and greed from millions of traders around the world. When you enter the market, you are not just trading currency pairs, you are trading against global emotions. If you fail to control your own emotions, the market will control you. Let's start with fear. Imagine you open a buy trade on EUR/USD with a clear stop loss. Suddenly, the market drops a few pips against you. Instantly, fear rises. What if I lose? Should I close now before it hits stop loss? This is where most traders panic and exit too early. The irony is, many times the price later reverses and goes in their original direction, but by then fear has already forced them out. The solution is simple, but difficult to practice. Trust your plan. If your stop loss is based on logic and analysis, then accept that loss as part of the game. One loss does not define your career, but fear-driven decisions repeated over time will destroy your consistency. On the opposite side, there's greed. Imagine your trade is in profit, your take-profit target is close. But instead of closing at your planned level, you start thinking, maybe I should hold longer. I could make double. That's greed whispering in your ear. But markets move in cycles. What goes up eventually pulls back. Many traders turn winning trades into losses simply because greed made them overstay. To overcome greed, you must learn to be satisfied with consistent profits, not maximum profits. Professional traders don't aim to catch the entire move. They only capture the safe part of the move. That's why they stay profitable in the long run. Another dangerous emotion is revenge trading. This happens when you take a loss and immediately open another trade just to win back what you lost. But trading is not gambling, and the market does not owe you money. When you let anger and frustration control you, you abandon your system and trade recklessly. The best solution here is to take a break. Step away from the screen, clear your mind, and come back when you can think logically again. Remember, the market will always be there tomorrow. Your goal is to survive today. Now let's talk about overconfidence. This usually comes after a winning streak. For example, you win 3 trades in a row, and suddenly you feel unstoppable. You increase your lot size, risk more than usual, and ignore your stop loss. This emotional high is dangerous because it blinds you to risk. The reality is, markets are unpredictable. Even the best strategy in the world has losing trades. That's why risk management is your protection against overconfidence. A golden rule followed by professionals is to never risk more than 1 to 2% of your trading account on a single trade. This way, even after several losses, your account is safe and your emotions remain stable. One of the most overlooked emotions is impatience. Many beginners cannot sit still and wait for setups. They feel like they must always be in the market. This leads to overtrading, entering low-quality setups that don't meet their rules. Successful trading is about quality, not quantity. In fact, some professional traders only take 3 to 5 trades a week, but those trades are carefully selected, with high probability. To deal with impatience, set alerts on your trading platform. Let the system notify you when price reaches your level, instead of staring at charts all day and forcing trades. A key step to emotional control is detaching from money. If you are trading with money you cannot afford to lose, like rent, bills, or borrowed funds, emotions will control every click. The moment price moves against you, fear will paralyze your mind. The truth is, you must only trade with disposable capital, money that you can afford to lose without damaging your life. This detachment gives you freedom to follow logic, not panic. Treat trading like a business, not a lottery ticket. Here's a very practical tool: trading journals. After every trade, write down 3 things: why you entered, what emotions you felt during the trade, and how you exited. Over time, you will see patterns. For example, you may notice you always exit too early because of fear, or you risk too much after a winning streak because of overconfidence. By recognizing these emotional habits, you can correct them. A journal is not just about numbers, it's about self-awareness. Now let's bring this all together. Controlling emotions in Forex does not mean you become a robot without feelings. You will still feel fear, greed, excitement, and frustration. The difference between an amateur and a professional is that the professional does not let emotions dictate their actions. They may feel fear, but they still follow their plan. They may feel greed, but they still close at their target. Discipline is not about killing emotions. It's about acting according to your rules despite emotions. Here's the golden mindset. Focus on the process, not the outcome. You cannot control the market, but you can control how you react to it. If you followed your rules and still lost, that's a good trade because you executed discipline. If you broke your rules and somehow won, that's a bad trade because it teaches bad habits. Long-term success comes from consistency, not from lucky wins. So the next time you place a trade, pause for a second and ask yourself, am I trading my plan or am I trading my emotions? Remember, strategies give you entries, but psychology gives you profits. Master your mind and the market will reward your discipline. If you found value in this video, make sure to subscribe to Financial Freedom FX. Hit the like button and comment below what emotion affects your trading the most: fear, greed, impatience, or overconfidence. This way, we can build a strong trading community where we grow together.